James, no great surprises. The change in rhetoric, as I mentioned, of late, is really what we're focusing on now, right?
Yeah, that's right. I mean, we've had this big shift in the way the Bank of England have characterised the outlook over the last 6 weeks or so. Mark Carney alluding to the possibility of earlier rate moves. Moving earlier means that the eventual peak in rates may not need to be as high, so that would be less damaging for asset markets and such like. So,
how early is he going to move?
We think there's a good chance of November. The Labour Day data is phenomenally strong, but I think we do need to see some pickup in wages. At the moment, the headline wage growth is just 0.7%. That's really, really low by historical standards. I think we'd ideally like to see something close to 2.5% to make the Bank of England confident that that labour market slack is being eroded.
And what has happened to this whole slack argument now? Does it still stand?
Well, clearly, I mean, we've had 345,000 jobs created in the last 3 months, according to the official data. Unemployment's down to 6.6%. The Bank of England were expecting us to be at that sort of level in 3 years' time or so. So it just highlights that the labour market has improved dramatically, and more so than the Bank of England had been thinking. So, yeah, I think it is being eroded significantly. It's just that wage story that we're still waiting to develop.
Well, what do you make? What do you ING make of this discussion? And quite a few people are having this right now, of much smaller increments in terms of rate increases, 1/8% or 1/5% or whatever, a percentage point, I should say.
I mean, it's certainly possible. I mean, we think that there will be tentative steps. They just don't know how the global economy and the UK economy is going to react to a period of global policy tightening. Indebtedness is still a clear issue, so it's going to be moving very slowly. And I think for choice, I think they still move 25 basis points, but if they feel that happens, if that's too much, they could start to move in small increments further down the line. What
do you see happening to sterling? The cable's at a 5-year high or thereabouts now. Do we continue to see that strength?
Well, the ECB and other northern European countries such as Norway and Sweden are moving in a completely different direction. They're easing policy. The US is still making it clear it's not going to do anything until the second quarter at the earliest of next year. So you're looking at the likes of New Zealand, the UK, possibly Australia as well, as being areas of monetary policy moving earlier and also growth outperforming. So yeah, I think sterling perhaps has got more upside from here. So